Okay, so here is the asset-based composition analysis for Nestle. In asset-based composition analysis, we examine the types and proportion of assets over the years. This could help us in giving a better insight into the business model of the firm. Okay, so let's start with asset-based composition. This is just the common size analysis of balance sheet, where each individual item is mentioned as a percentage of total assets. So cash and cash equivalents make 5.6% of total assets. Short-term investments 1.1, inventory 6.9, trade and other receivables 10.1, other current 1.8. So total current assets makes 35.5% of total 100% of assets. So in the non-current asset sides, property, plant and equipment makes this much of assets, goodwill makes this much of assets, intangible assets makes this much of assets, and other non-current assets makes 12.5% of assets. Okay, so while studying this, one observation that analyst comes through is that intangible assets is a considerable proportion of total assets. It represents 40% of total assets, and goodwill represents 76% of total assets. Okay, so goodwill appears on balance sheet of a company if company pays more than the fair value of assets in an acquisition of a company. A company has high level of intangible assets if it is doing a lot of research and development or also making patents. Also, the company can also have high level of intangible assets due to if it is buying other companies. These are identified intangible assets and these could be shown separately on balance sheet. Shown separately from goodwill. Goodwill is the unidentified intangible asset. Normally, we expect to see a growth by acquisition strategy followed by companies in tech or in pharmaceutical sectors. This company belongs in food and beverage industry. Here we expected to see high investment in total current assets and also total physical assets like property, plant, and equipment. So just to confirm the suspicion that the company is following growth by acquisition strategy, the analyst look at the cash flow from investing activities for previous 3 years. Here he calculates the acquisitions as percentage of total investing activities. Notice this is the line item which is the amount spent on acquisition of the business. This amount is divided by the total cash flow from investing activities to get this ratio. Notice that this ratio has been very high over the past 4 years, greater than 60% nearly. So this confirms the analyst suspicion that the company is following growth by acquisition strategy. I expect this exhibit to be less testable from the exam point of view, as it is just a supporting exhibit. This one is the main exhibit related to asset-based composition. Here we had only studied one formula, which is acquisitions divided by cash flow from investing activities.